Okay, it's Tuesday, the 3rd of October, and I've just entered into a short position after this 7:55 a.m. candle. I've actually been triggered a little bit lower than I would have liked. Basically, the FTSE opens at 8 a.m. The 8 a.m. candle shot straight down. By the time I hit to enter into that trade, it just triggered me a little bit lower than I wanted. Now we have the MA200 just in the way of this setup. I want to be a little bit careful there for potential bullish reactions. The FTSE has been in a very strong bullish run over the last few days, but for this trade, I am looking for a move down toward around about 7,427 to 7,428. Basically, the reasoning for the trade is, well, first of all, it's a strong level of resistance, and the FTSE has been holding there in overnight trading. Now, when I got the setup, what I'm basically looking at is the potential, well, for the bears to step in, first of all, to drive the market lower, but also for people who have ridden this move all the way up, the strong bullish run up, looking at them to take some profits off the table. It's a good level to do that. And when I got the signal, I was happy to then get into the trade. We've also had a small potential double top, which has set up in the overnight, or in the early morning trading even, sorry, I can get my words out eventually. When I entered into the trade, the entry point was breaking below basically the center of the small double top. Just a little bit of added confluence for me. Now, what I'm going to do with this trade is I am going to approach it in a slightly more cautious manner. A couple of different reasons for that. The first one being that, well, we are in a strong bullish move on the FTSE 100. But the second one being, I want to show you that there are ways to take trades that don't just involve getting into a trade, having a blind target on the market, and then holding it for either a full position loss or reaching your target there. You can approach your trade in different ways, as long as it makes sense to you, as long as it is part of your trading plan. The way I'm going to show you for this trade, basically, it's how I trade from a zone where I would almost say that it isn't quite a key zone. So I look at zones in terms of, this is a key zone, it's high probability to get a strong reaction, so I want to take a trade from here. But then there's also zones where I've set it up and it's like, right, okay, it's got daily support and resistance levels, maybe it's got a pivot point in there, price is holding at the level, but just with the way the market has been moving, for me, it doesn't make too much sense for the trade. Now, if I get a perfect setup on the 5 minute, I will still take those trades. However, I will approach them a little bit more cautiously. Now, because we've been in that bullish run-up, I'm going to do it on this trade. And I will talk you through what I'm looking at and what I'm doing each step of the way. Okay, guys, the 8 a.m. candle has now closed, and what we can see is the bulls have stepped in at that MA200. They've actually shoved that candle up a fair amount. So what I'm going to do now with this cautious approach, I'm going to bring the stop down. What I'm looking at is, once the market has reached my management point, I like to just protect the trade a little bit more. So I'm bringing the stop down to the high of this 5 minute candle. You can just bring it down to the previous swing, or sometimes I'll even just half the size of the stop, sorry. Basically what I'm doing is looking for a way to cut my losses early. Now, I'll only ever do that after a market has reached a management point. The management point being, the first sensible area where, if I'm incorrect, the market would likely react from and then move against me. So I'm still in the trade, still looking for that potential target. The stop has been moved down, and we'll see how we get on. Just a few more points about this trade, guys. We are seeing a little bit more rejection at this MA200. Now, there's nothing to say that the market will not move against me, but what I'm doing is I'm basically looking at the market, looking how it's reacting. I had the reasons for my trade early on today. I then decided that it would be a cautious approach to the trade just because of how the market has been acting. And then after that, I have my plan in place. So as long as your plan is in place, as long as you know what you are looking to do each step of the way, it really takes out a lot of the panic in the trade. Okay, so the 5 minute candle is again attempting to break down. I would like to see it breaking the low of that 8 a.m. candle. But yeah, when you have your plan, it's sort of taking the ambiguity out of the trade. You don't have to sort of in the last 10 seconds of a candle and it's starting to move against you all of a sudden. You don't have to start panicking and thinking, okay, what am I going to do now? This wasn't supposed to happen. I don't really want to have a big loss, so maybe I should just close this trade out. What I'm looking for is that move down toward that target. Now, if this candle does close very bearish, I don't really then want to see the bulls stepping in very strongly once again. This is basically the bears now attempting to break through that MA200, the previous level of support that the ATM candle found. So I don't then want to see very strong bullish sentiment coming into the market after that. So what I am going to do is move my stop down to the break-even level. All right, the trade is now protected and we are relatively close to this target level. So what I'm going to do is if we do reach the level, I'm going to close out 75% of the position. Now, that's another little thing worth going over. What you can see quite a lot is when people are in trades, let's say you have a target. Let's say your target is that 7428 level. The market may drop down into that 7428 level. You're sitting, getting ready to come out of the trade, but you start to say things like, you know what, I'm just going to hold off on this exit. The market has came down pretty strongly. I know this is my target, but I could probably get a few more points. I'm just going to hold on. And what you do is you hold on, maybe the market pops through another couple of points, but then it shoots back up by 4 or 5 points. And then you start thinking, oh, well, I really should have taken my profit at the target. If it goes back to my target, then I'll exit. And what happens is, of course, the market starts to move against you. So I'm just looking for this move down into this target level. If we see it, I will close partials, and then I will look to see if we can run profits into that zone down below. But the trade is now protected. I should also mention, actually, when I decided to do this cautious trade, I would say when trading more cautiously, at least 70%. Okay, guys, so I've just locked in 75% of the profits. Now, this trade has worked out well, but when you're trading more cautiously, what you tend to find is that on a high portion of the trades, they come back and they take you out at break even. It's just the nature of the beast. If you want to trade more cautiously and you bring your stop to break even relatively early, very often the market will chop back up and take you out of the trade. But this one has actually worked out very nicely. We have now locked in profits. We'll see if we get down into that zone below, then we'll see how the market reacts if it does get there. If not, it doesn't matter. I've already locked in the profits. Even if it comes back with the remaining 25%, it takes me out at break even. I've already locked in money from the trade. Okay, the final 25% has now been taken out at break even. We had a nice strong bullish candle there. It popped up and it just triggered me out of the trade. Okay, so the reasons for the trade were, as I explained, I was looking for the move down into that target level. That was the first target. I decided to look to potentially run further profits. I was looking for the bears to step in, also people to take profits, the bulls to take profits after the strong run-up. We also had that small potential double top in the early morning price action. Let me just get rid of these emails, guys. Sorry, just start that again. Small double top. We had the first arm, first shoulder right here, down to the center, and then we had the second pop up. We got the pin bar for the entry. The trigger, when I got triggered in, it would have been below that center of the double top. Just gave me a little added confluence to the trade. So 8:15, that is me now done for the day, guys. Didn't get the full profits on the trade, but it still worked out very nicely for me. As always, I hope that was helpful. I hope you've all had a good trading week. I'm James Orr, and thank you.